Question number 3, Right Honourable Winston Peters.
This question is to the Minister of Finance. Will he introduce a government guarantee on bank deposits in New Zealand? If so, when?
Honourable Bill English.
Mr Speaker, depositor protection is in place now through the Reserve Bank's Open Bank Resolution scheme, which has been thoroughly consulted on and is in place as we speak. This scheme includes a government guarantee on all depositor funds that are not frozen as part of bank resolution. Because of recent experience with government guarantees, that is the collapse of South Canterbury, and because of the substantial contingent liability associated with the prospect of any kind of prospect of failure of our large banks, there is continuing work by officials and ongoing discussion with the banking sector around the appropriate level of bank resolution and depositor protection. Managing the risk of bank failure is complex with potentially large costs to the taxpayer. The government has to balance the security offered by a government guarantee to depositors alongside the need for banks to have good incentives to ensure that they are sound financial institutions and won't impose large costs on their depositors, shareholders, creditors or the taxpayer.
Supplementary question, Right Honourable Winston Peters.
Why is the government not following the example of many other developed economies in providing the type of government guarantee of bank deposits to a reasonable level?
Honourable Bill English.
Well, Mr Speaker, there has been ongoing discussion about the appropriateness of deposit insurance in our system. The Reserve Bank has implemented what they believe to be a more focused solution, that is open bank resolution, which includes depositor protection. It really comes down to a matter of the right incentives on the banking system. On the one hand, the reality is that when banks have been threatened with collapse, governments have provided a guarantee. On the other hand, we don't want to undermine the need felt by the owners and managers of banks to ensure that they can't play fast and loose with financial risk simply because their depositors won't suffer any losses. The member's pointing, I think, to a pretty finely balanced equation. And because of the significance of this for the government balance sheet, we do make sure there's ongoing testing of the current regime.
Supplementary
question, Right Honourable Winston Peters.
Well, having regard to this very finely balanced equation, when will the government come to, or the financiers come to a decision and consider all those countries with a government guarantee for bank deposits such as Australia, Canada and the UK to be actually right in this matter now?
Well, I can assure the member that there is ongoing discussion. For instance, the Australian the regime that applies in Australia to our banks is different than that which applies to New Zealand, and those matters are discussed regularly in the Trans-Tasman Banking Council, and all the issues that the member I know would want to be raised have been raised in that context, and we hope to continue resolving the differences, bearing in mind that each government has the interests of its own taxpayers and depositors at heart, and they don't always align completely with each other.
Supplementary question, Right Honourable Winston Peters.
When can we hope this government to actually do something rather than risk another South Canterbury finance fiasco by not putting a government guarantee scheme in place before the onset of another financial crisis?
Honourable Bill English.
Well, Mr Speaker, again, the member's raising reasonable points. One of the arguments for depositor insurance is that it effectively means depositors prepay if any bailout funds. Now, of course, that's not costless. That imposes costs on the whole economy because effectively interest rates would have to be a bit higher to achieve that. As I said, as I've indicated, the government has been monitoring both the current regime that's in place, open bank resolution, which does include government guarantees of depositor funds, and the differences between our regime and, for instance, the Australian one, which is a pretty real-time issue to have two different regimes applied to the same banks.
Supplementary question, the Right Honourable Winston Peters.
Why is the government continuing to mull over this issue when it can be seen to be encouraging New Zealanders to put their savings offshore into another country's bank accounts and have those accounts covered by another government's guarantee, a la Australia?
Honourable Bill English.
Well, Mr Speaker, right now I don't think that is the case. I mean, it was recently as yesterday Standard & Poor's, a credit rating agency on whom both governments and bank depositors would rely to assess the soundness of our banks, said that our banks are sound and that the open bank resolution process that's in place is a sound scheme. The member may be referring to events around the implementation of the sovereign guarantees back in 2008-9, and certainly there was a risk then that New Zealanders would remove bank deposits from here and put them in Australia if they believed they were going to be insured there. Again, it's not clear in the future that an Australian government would tolerate that kind of behaviour either. I'm not criticising the member for raising the issues, they're all legitimate issues.
Supplementary question, Right Honourable Winston Peters.
Could I ask the Minister as to why this matter is so time-consuming to conclude that he is adverse to giving guarantees when in fact the government does guarantee, for that member's sake, the capital interest held in the Public Trust Common Fund, for example? Get your facts right, big ears. Get your facts right,
Order,
big ears.
just ask the
It does guarantee. Well, he wants to chip in.
Order.
I'm telling you.
Order. 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 Another example, not different to yesterday, where interjections do not help the order of the House. I'm going to invite the member to start his question again.
Very reasonable of you. Thank you very much. If the Minister and the government is so adverse to giving government guarantees, why is there a government guarantee, for example, for capital and interest held in the Public Trust Common Fund?
Honourable
Bill English.
Well, Mr Speaker, at least this member here uses his ears for listening. We could get into the detail of the public trust, but it's less than half of 1% of the value of banking assets. In fact, probably less than about 1/4% of the value of banking assets. So we haven't paid quite so much attention to the public trust. But the member is, I think, rightly raising issues around the nature of the Crown guarantee. In the end, the important thing is that taxpayers are not left with the burden of badly run banks, that we should have a regulatory regime and a set of incentives to ensure that banks that are large enough to wreck the government's books never actually fail.
Question number 4, Materia Ture.
Tēnā koe, Mr Speaker. Tēnā koutou.